which means more sessions. So buckle up and get your cup of coffee, right? Sit down and enjoy. It's going to be 1, 2, 3 more hours. So which one matters more?
I believe RR won't matter without the right. Yeah. I believe RR won't matter without the right technical edge.
All right. So we have one saying that this doesn't matter without this. Next.
I agree with that.
Percentage.
RR would distinguish your risk and reward.
Which this is basically risk management, right? So
yeah, exactly. It would distinguish your risk management.
Do they matter equally? Do they matter equally? Do they complete each other? Are they there to help each other? Is one more than the other? So far, we have someone saying that edge matters more.
I believe
it
is
one by one.
Being right doesn't equal profitability.
One by one.
I want to say they matter equally.
All right.
Because you have to know what your A+ setup is in order to feel comfortable risking.
How would you know your risk on an A+ setup though?
Because through tape reading and journaling, you begin to get a feel of what an A+ setup feels like, what it is to pull the trigger and to see a trade develop that fits your narrative, that follows your thesis.
So the risk, what is the risk?
What do you mean?
You need a clearly defined invalidation point, which is their stop loss.
I mean, do you not know your risk when you place a trade? I mean, like,
even if you have a good setup, even if you have a good setup, you may win 2 or 3 times. But if you have
are you going to re-enter a trade if your RR fails?
If your RR is good, then the method itself will prevail, I think. If your risk management is good.
I actually think personally, according to what you wrote here, whenever you put up 2 stuffs, I put a verse. It has to be which one do you think is better?
Can you speak clearly, please? Come closer to the mic.
Yeah.
Come closer to the mic.
Yeah. So for me, I think it's RR and percentage.
Okay.
No.
So we're not agreeing. The answer is first of all, if we want to continue, then when you hear someone talking, let him finish, and then you start talking. All right? Otherwise, so one by one. That's number one. Number two.
Even if you have a solid risk management, the technical edge that matters. Really.
Okay, so if you said technical edge, you're wrong. Technical edge is irrelevant. Doesn't matter. Proof. I can prove this in 2 different ways. Number 1, a coin flip is profitable. If you read about the coin flip strategy, right? There's a whole system, a trading system based on a coin flip, right? So your edge is flipping a coin, not some smart money concepts or some liquidity purge or turtle soup or whatever. Your edge is a coin flip. That's the strategy. That's the system, right? Go read about it. If you have a coin flip as your strategy and you have a good RR and percentage gain / loss, risk management, then you'll make money over a large enough sample size of trades, right? Conversely, if you have an 80% win rate, right? Now, which of you would like an 80% win rate? All of you, right? Everyone. But if you have an 80% win rate, which is pretty good, right? It's pretty accurate. Can we agree that an 80% win rate is good?
Yeah.
Yes.
So if every 10 trades, win 8 trades, 4, 5, 6, 7, 8, 9, 10. You win
8 of them.
And I know someone like this, right? I'm not going to name him, but I know someone who has an 80% win rate, even more probably. He's one of the best price action readers I know, right?
Fins.
No name is mentioned, but he lacks this part, which is why his win rate means nothing to his balance, his bank account, right? Why? Because if you have this 80% strike rate, which is incredible, right? It is an incredible feat to achieve. But if you don't have this, then you'll win 8 trades. 1, 2, 3, 4, 5, 6, 7. That's not counted properly. 8. On the 9th, you'll blow your account. If you have a 90% win rate, as ICT claims to have, right?
He's up there, yeah.
Which I don't doubt, to be honest. He's one of the best, right? Price action callers in history. He wins 9 out of 10 trades. If he doesn't have this 10th trade, blown account, right? So
Yeah.
this is irrelevant. You can have this at 90% and still be a loser. Or you can have this because of this. So this is dependent on this, not vice versa. Right? So you got to think correctly. Everyone's looking for enigma and the holy grail and candle counting and turtle soup or whatever, right? You're not thinking correctly. Think correctly. Change your mind. Or you can have this as at a shitty, even 30%, right? If you have a good RR. But let's say 50%. Luck. Lucky guesswork. The phrase. And you have a good, solid this, then you win. So does this matter?
No,
Nope.
no.
Nope.
What's
And if
his
someone asks
PE
you,
stand for again?
and if someone asks you why, right? Because any idea I tell you, I can defend for hours, right? If I can't defend my idea I'm giving you over here for hours, I don't say it, right? So this one, if someone asks you, why does this not matter? Well, because of this and this, because of a coin flip strategy, and because of these writings over here, which is you could win 8 on the 9th you blow, you could win 9 on the 7th you blow. So it's all, everything is explainable. And in summary, technical edge is irrelevant. Turtle soup is irrelevant. Candle counting is irrelevant. DR is irrelevant. Hoppy's book is irrelevant, right? The open, hello, and close are irrelevant. All the horse shit you see on Twitter is irrelevant. All that matters is this. Without this, all your knowledge, and I'm sure there's a bunch of you, right, who are relating this to this pretty hard, right? You may have a lot of knowledge, but you have shit management, which is why you get wrecked, even though you're some advanced student of price, right?
Yeah.
So that is regarding technical edge versus risk to reward / percentage gain. Now that does sound kind of strange, like because this whole course is about price action and reading price action. And I don't like to use the word course, to be honest. It was not the intention to be a course, quote unquote. That's not my intention. It was just a gathering, a sit down, just a chat more, if you will, right?
Yes, sir.
In summary, you don't control price, even if you have Enigma, right? You don't control price. You control your risk. You don't control price. You control your...
Excuse me, Z1, could you turn off your mic if you're not speaking?
Sorry.
It's gonna go into recording. That's why. No. Yep.
Right, so adjust your risk to price. No, adjust price to your risk, not vice versa. Excuse me. Right? That's number That's point number 3. Right, let's remove all this. If you want to take notes, then you have this in front of you. Or no, I'll give you 5 seconds and then I'll delete it. Delete 400 drawings. Remove. So point number 3, what are the markets? Point number 2, 8, trade losing streak. Point number 3, technical edge versus risk and reward. Right? Markets, 8, trade losing streak, and edge versus reward. Number 4 is the journal, a super important aspect when it comes to learning a model, especially learning price in general, right? Because every single job in the world has a register, right? Every single job you see, as a lawyer, he doesn't memorize his client's documents, his case details. Well, except if he's a psychopath, then maybe. But generally speaking, and we speak in generalities, not in exceptions, because exceptions do not disprove the rule, right? So every profession in life has a register. A doctor as well, right? Doctor. When a patient comes to me, for example, I have to take the name, the age, his medical history, his reason for consultation, signs, symptoms, allergies, family medical history, etc. Right? For every single patient, I can't suddenly skip a patient one day because I'm feeling tired. Right? I can't say, you know what, fuck it, today I'm not gonna write his allergies because that can kill him. That can lead to his death. Right? That's an example. So I don't do it because I want to. I do it because I have to do it. All right. Even the most basic job, cashier, for example, basic meaning not to belittle them, but just a very simplistic job, cashier. Even he has to print you a receipt at the end and give it to you. So everything is registered, right? So why should trading be any different? So the purpose of the journal is 2 things. Journal meaning journaling every single mistake as you would a patient, right? As I would a patient, not you, a bunch of you. I've seen a neurosurgeon in there. I see you. So as we would a patient, we journal every single trade to see the following. And before we look at the following, the purpose is 2 things, is to eliminate mistakes. Eliminate mistakes. Horrible handwriting. Good luck reading it.
Typical doctor.
Yeah, what can I do? Comes with the territory. And correcting mistakes and eliminating shit trades. Eliminating. That is shameful. I can't do that. Eliminating bad trades. Right? Now, before you say, fuck you, Romeo, what is this? What is this? We came for turtle soup, for price, and you're giving us this is the foundation. Because to read price the way I read price is why you paid me and why you came here anyway. Right? You got to think like me. So, bad trades. Now, how does this work? Correcting mistakes is self-explanatory, right? Mistakes. You identify a mistake, you're repeating again and again, and you never do it again. It's that simple. And mistakes will happen. There's no one perfect. Even ICT himself journals on paper, right? At least he used to before he retired off of the course, right? Eliminating mistakes. So journaling is essential, right? You identify the mistake you made and you correct it. Because every every sickness has a cure and every problem has a solution, right? So whichever mistake you make, whatever the mistake is, I held too long. What's the mistake? You didn't identify a reversal point, right? It went above a high, and you expected it to go higher, and it reversed. Turtle soup. I didn't hold too long. That's the mistake. The correction is keep in mind the higher time frame bias, because when you don't hold long, or when you catch a move and you see it rally like 20 or extra, why did that happen? Because you didn't keep. There's a very specific reason. It's not random. Every problem has a solution. So when you when you don't hold trades for long enough, it's simply because you did not keep the higher time frame bias and flow in mind, right? I didn't take partials, right? Because you didn't consider it as an area of reversal or reaction, right? Because we take partials at two places. And someone's mic is on, so
Yeah, I just want to. It is vice versa when you do keep the high. When you're doing low time frame, yeah, you're seeking high time frame evaluation.
that is correct. Which is when you hold a trade, when you can't hold a trade for long, it's two reasons: the higher time frame, and you're not confident in your analysis abilities, right? Which means more tape reading. Because the more you tape read, the more confident you get. The more you believe in the system. So, not through backtesting. Side note, backtesting is cool, as we know, and I'll be showing some examples of history. History meaning not history of people, history of the charts, history of price action. Because as we know, history is a gold mine, and it repeats itself for those who have eyes to see. So, backtesting is cool, but tape reading is the skill you want to master and really focus on. So those are some examples of some mistakes which I didn't write. I'm more of a speaking guy, which means that I'm getting some messages saying someone can't hear the voice. Is my voice clear?
Super clear.
Hey, bro, you
Voice is clear.
All right, in that case, so my friend who was sending me a DM, you will get the recording later on, don't worry. I'm assuming someone's recording, huh? I'm relying on you guys.
I'm still recording.
All right. There's someone who promised me to record 2 people, so it should be fine.
I'm 5 minutes in.
Any questions you have which are not related to the current topic at hand, you can leave them for later because they'll be answered, right? So those were some examples of some trade mistakes and their corrections, right? I said them, I didn't write them, so I hope you noted them down. There's some common mistakes.
And these common mistakes are just errors, right?
Or just what?
Human error.
No, they're not. I mean, they are human error because, as we know, the chart is perfect, right? The chart is always in sync. Time and price are always in sync, right? Liquidity pools are always getting hit at certain times, at the exact times they're supposed to be hit, right? Turtle soups, which is the expansion, the swing points, the highs and lows, the major swing points, they always occur at the times designated for them. The only error is going to be from the operator, right? If I make a mistake, if you make a mistake, if ICT makes a mistake, if any of these charter members over here, which I see, make a mistake, whoever makes a mistake, right? It's not because of price. You see people blaming price. Oh, what is this shitty price action? No, it's you, right? You're the operator of the system. The system, if you review the manual, the system would tell you not to operate in such conditions, right? So it's human error and it's correctable. That's the point. You make a mistake, you can correct it. There is a correction for every single mistake you have.
So would you say that there's nothing like low probability conditions?
No. There's market profiles, and you have to identify the market profiles, which I've said for a long time, forever. It's the way you analyze the market, right? You profile the market and see, is it valid to be approached or not? Which is the next lesson, right?
Thank you.
Market
Romeo,
profiles.
when you, yeah, okay.
So the market is always in one of the three profiles, right? As an intro, the market price, when you open a chart, you want to profile the market like, I don't know if there's the cops over here, a law enforcement, but when you see a criminal or a suspect, right, then you profile them. You make sure, are they approachable? Are they a threat to the surroundings, to me, right? Can I approach them without a weapon? Do I need a weapon? Do I need backup, right? You profile the situation, the person, and then you approach based on your analysis of the profile, right? So same with the market. You go, you open the chart, that's the first thing I do, is profile the market. That's a common mistake, which people say, hey, Charles Super is a scam. I tried some random high and it just blew through. Why? Because market profiles. You open the chart. Are we trending? Or are we ranging? Right? Because it's only two market profiles. We're either in a trend or a range. Always consolidation, expansion. Consolidation, expansion. Consolidation, expansion. There's a way to trade each of them. Right? It's a rising channel. I don't know why I drew it, but it's there. And of course, a 2.1, you can call it, is a choppy market, meaning not a ranging, a choppy, which is visibly illiquid price, right? So there's no liquidity. It's just it's not even ranging. A ranging is a clear defined range, as you've seen me draw many times on Twitter, right? I draw when there's a swing low and a swing high, and it stays in between the swing low and swing high. This is a clear defined range of price, right? That's different than a choppy market. The chop is this over here inside here, right? But then again, one could argue that the chop on a higher time frame, as we saw, is a expansion on the lower time frame, because time and price are fractal. So due to the fractal nature of price, if you dig deep inside of a consolidation, you'll find a classic sell or buy candle, right, on the lower time frame. So consolidation, expansion. So this
Robert,
could have.
can you give an example on BTC?
Sure. So, for example, which I gave just a few hours ago, right? But here you go. So you have this. Let's choose a very choppy, visibly choppy piece of price, like this one, for example, right? We saw just now, remember? This one. What is this? When you see small candles like this on the higher time frame, small, visibly, so we're looking at the size of the candles, right? Size will tell you whether it's a consolidation or an expansion. So when you look at the size of the candle, a small candle like this will indicate to you a range on the lower time frame. We saw this a couple of hours ago, right? Zoom out. So this smaller time frame, this larger time frame chop, which looks untradeable, right? If you look at it as only an hourly chart, as a daily chart, excuse me. If you look at it on the daily, then it's chop. It's nothing. It's quote unquote low probability conditions, right? But if you look on the hourly, for example, let's hope we can catch it in the hourly, then you can find that it is a clear defined range, correct? So we went from a higher time frame chop to a lower time frame range. Remember the three market profiles? One is range, one is trend, two is range, and 2.1, which is part of range, is chop. So we went from a higher time frame choppy market to a lower time frame ranging market over here. And if you go to an even lower time frame, so a clear defined range with a high and low, right? Turtle soup, range low, range high, classic. So within this range, you have this candle, for example. This candle is a classic buy, yes or no? This one right here.
Yes.
So if you go to the 1 minute time frame, this was a trending day. It was like a classic buy. You can trade this by itself, right? Classic buy over here. Right. So this speaks to the fractal nature of price.
That would be like a market structure shift within that.
There would be a you'd also probably see a turtle soup or a failure swing inside there, right? Over there. The same, you'd probably see this. The same exact pattern, which repeats, pattern, quote unquote, which is
before the market structure shift, like you reckon, we had the low and the high, and you see price going down. How would you determine that, though?
Determine what?
We had your arrow right there. Before that, you can see the low and the high.
Right.
You would just wait. You would just wait into the market structure, or that low and the high.
Right.
You would just wait into entering, right? Then that would be considered a turtle soup right? Or
you'd wait for this, you mean?
Yeah. No, that would be considered market structure.
I'm not talking about entries right now. I'm talking about the fractal nature of price, my friend, right? How to enter is number 4, right? We'll get to it. And this one specifically, right? But now I'm telling you that the chop on the daily time frame, which is untradable, right? Untradable chop, pretty much like this, right? So profile number 2.1, right? On the lower time frame, it is a range, right? So profile number 2. On an even lower time frame, it's a trend right here within this candle. How do I know? Because that's how candles work with the open, high, low, and close, right? This candle, you can see right now, it opened like this. It went below the opening price. It rallied. Right? Probably an OTE in between, as they do. It went and it gave a high, then it closed. Right? The classic 3 trades per candle, which I've said on YouTube. It's what it is what ICT teaches, right? So buy in a bullish environment, buy below the opening price. Find your pattern here, right? Don't just look for a pattern randomly. Find the pattern in the wick. So below the opening price, buy, rally, classic buy candle. So this right here, this is a trending candle in a range in a chop. Right? One day. So in summary, all those details aside, is we have the market types, market profiles, if you will, which is a trending market. So you open any chart, are we trending, are we ranging, or are we chopping, right? 1, 2, 3.
Romeo, the 2.1 is what you call a seek and destroy?
A seek and destroy is this, according to ICE. It's just going and taking liquidity. What's the definition of seek and destroy? Tell me.
it takes out the buy stops and the sell stops and the buy stops and the sell stops.
And what does it sound like?
Ai luat ceva salat.
It sounds like 2.1.
Deci mănânc așa, nu?
Also this, right?
Yeah. Yeah.
But a real seek and destroy in my books, right? It's not what ICT says. ICT goes and refers to any, not only him, like even the people on Twitter. They refer to any range as a seek and destroy. Nope. There is a way to trade ranges, right? My bread and butter trades come from ranges. So you have range, you have trend, and you have a visible chop. What's a chop? A chop is, and even the chop, as I showed you, is tradable. If you lower the time frame enough, if you go small enough, and eventually it'll fit, right?
And the other question was regarding the eliminate mistakes part. Yeah, while you journal, right? So you do.
I'm getting to it right now. Right now. This is just a side introduction to market profiles. So eliminate mistakes. You mean this one or this one? Which one?
So the left one, when you said eliminate mistakes, is that it's always
What's your name?
Rob.
Robin, right?
Yeah.
Right. So you were saying?
So I was saying, you said that there is no bad market but a bad operator, right? But you do agree that every setup fails once or twice. So how do you actually identify if the setup has failed or you were wrong?
What you're doing right now, do you mean like live or afterwards?
Like, let's say I took a buy, okay, at a higher time frame PD array according to my model, okay, and then it failed. But
so the higher time frame PD array failed.
Te-am sunat azi dimineață.
So how do I classify if it was my mistake or if the price actually was failed?
Is that your question? Your question is, I entered at a higher time frame PD array, and the higher time frame PD array failed.
Yeah, the setup failed.
Then your analysis was wrong. You were wrong in your analysis. It's that simple. Why? Because when do higher time frame PD arrays stop working? When you reach the higher time frame liquidity pool, right? Then you can expect a displacement, and from there on, as soon as they start disrespecting bearish or bullish PD arrays and respecting bearish ones, order flow, basic order flow, nothing new. Right? So if it fails, then follow the order flow. It's that simple. That simple.
So you're saying like if it fails low time frame, seek higher time frame.
If a it's a tweet of mine. If a 5-minute support level fails, go to the 15-minute. 15-minute support, a key level, a PD array. If it fails, go to the 1 hour. If a 1 hour key level fails, keep going up, right? And I'll show an example of this in the upcoming 2 hours, right?
Okay.
So, regarding eliminating bad habits. Bad habits. Bad trades, excuse me. Now, when you go through a process, and we're taking too long in this lesson, so I'm going to have to shorten this a bit. When you go through the process of writing down for every single trade the following, right? So me, for example, every single trade I take has this written down for it. A bit less now, of course, but every single trade is, for example, trade number 69, right? The number of the trade, the asset class, and two things, before and after. Right? Before and after. What's that? Before, I expect ES to bounce at weekly FVG and attack February highs. Right? Expectation. So before is the expectation. That is a horrible, disgusting handwriting. Whatever. Who cares? Expectation. And after is after it happened, of course. When did it happen? Where did it happen?
Yeah.
How did my expectation play out? And how could I have done better? How could I have executed better? I entered too early, for example. I was trying to catch a bottom. Right? Too early. I got wrecked. Why? Because you wait for the first high that broke a low to be taken. For example, you don't wait for it to completely trade into theory. For example, right? So when, where, how did it play out, and how could I have improved on my execution? So when you do this for every single trade, because you have to, right? Imagine doing this for every single trade you take, not because you want to, because you have to. And would you really even consider that order block FVG lookalike, which you're trying to trade because you just because you want to press the button and feel the thrill of a win again, even though you're on a losing streak, right? Would you? You wouldn't. So this makes you a lot more selective with your trades. It makes you take less trades, selective, right? It makes you a lot more selective and picky with your trades. That's how you want to be. Right? You can be, you can overspend trades in an expansion leg. For example, in a classic buy, you anticipate at least 2 entries, one over here for the turtle soup and one OTE, right? At least those 2, turtle soup, OTE. They're guaranteed almost, right? So on this price leg, you can overspend your trades, but generally speaking, you have to be super selective. And the process that helps you with this is doing this. Helps you with this. Helps you with eliminating the trades is journaling, right? So when you do it diligently because you have to, then by default you take less shitty trades. So that pretty much caps the foundation. Finally, took a bit longer than expected, but that's why we have disclaimers in life.
We still have 3 classes left, right?
Of course. Obviously, you're not going to go until you get all those 4, right? We may not, of course, as I mentioned, it's not A to Z completely. A to Y maybe X, right? Y and Z belong to me.
We'll get to Z.
We'll see. We'll see about that. Fine. For myself. So. That is the foundation capped. This is how you think, right? So in summary, just a refresher, because when learning, the best thing you can do is take a quick review after you learn, directly after you learn. Whether it's university, whether it's class, whether it's high school, it's whatever. The best way to learn is 1 review before the class, focus during the class, 1 review after the class directly, and 1 review when you get home. That way you've already seen it 4 times and you are golden. So, to review, what are the markets? You know, they're not a exchange place. Nope. 8, trade losing streak. Technical edge versus risk and reward. And finally, journaling. This is the foundation, the base way to look at price. All right. Now, any questions? Before we go into number 2, which is the mechanics, the basic mechanics of turtle soup and smart versus dumb money. So before we proceed, do you have any questions? Foundation? The mic is yours, my friends.
I'd love to know, Romeo, how you personally journal, whether that is by paper or on your iPhone, iPad, etc.
First of all, I would rather that you guys don't ask personal questions, more charts, but I'll answer you, right? I personally journal on paper.
Cool. Thank you very much.
Pen and pad, old school, right?
So do you review every week?
Every single day at the end of the trading day, before I sleep, right? Whether it's on the phone or whatever, I always have to take a look at the charts every day, every single day.
Hey, Romeo.
What's up, buddy?
Well, besides the charts and everything that you look at, what do you see in the world economic? You know, you live in SCT, and how do you see your country like trying to like survive the war that's bleeding throughout the world?
Which war?
The Ukraine. The fake one.
Exactly. That answers your question. That is the answer to your question, my friend.
Do you see it bleed into your country or the rest of the world, or how do you see it besides the topic right now?
You just called it a fake war, right? So that in itself is the answer to the question, right? So how can a fake war bleed to other countries?
I don't know. Maybe other countries just bleed into it.
It hasn't bled so far, has it? And it's been what? How long has it been? A year? I think it started last February, right? If I remember, it was.
You're not wrong. Yeah, you're not wrong.
I remember why, because it was at the time that BTC bottomed temporarily at the range low. So at the range low, they declared the war, and then it rallied 50% almost. Right. That's the only reason I know the war exists, is because it was a bad news at a bottom. Right. That's the only reason I know the date it started. I think it was 22nd February or something. It was the swing low on BTC. Let's go and check.
Wait.
There you go. I think it was right here. Yep. Zoom in.
Would you manage to trade if the United States would buy and send money to them or no? How would you consider the a BTC trade?
24th February, right here. This is the war. Look what happened after the war.
Yeah. That is the war.
So we were saying,
how would you consider when the United States considered managing the money to Ukraine? Would you consider that like a buy or sell?
A buy or sell for what?
For the United States to consider the war, like sending money to Ukraine. You just pull up the diagram right there.
Right. So do you mean like would I buy or sell the equities, the dollar, what? Which asset class?
The dollar.
I don't trade news, my friend. I trade the chart. Right. I literally don't know what the news is. The only reason I know the news, as you saw, is because of a range low. Right. A ranging market. We hit the low. Magically, there was news down there, but I was bullish anyway, right? Because of the range low. So I don't look at the news to predict the charts. I use the charts to predict the news, right?
Horrible handwriting. Good luck reading it. Typical doctor.
There you go. Some leaking on. Huh? Enjoy.
Are you like playing like recordings?
Nah, it's all good. So. Any more questions before we proceed?
Yeah, one more, Romeo. Let's say you took a turtle soup entry, A+ setup, according to you, okay? But then it failed, okay? So are you going to tell yourself that you were wrong?
My A+ setups never fail. Right, but if it was to...
So you were this... Yeah, go on, sorry.
If it was to fail, right, then I'm wrong. I can never, and I will never blame price, right? It's always my fault. If I'm wrong, and I am wrong sometimes, right? But when I'm wrong, it's my fault. It's completely my fault. I misread the order flow. I misread the reversal time, the reversal point, the liquidity pool, something, the order flow. I misread something. So any mistake I made is mine, not the chart. I will never go and say shitty price action, right? I will say choppy price action, ranging price action, trending price action, right? Fast, slow price action, but I'll never say shitty price action. It's all my fault.
So you'll never say it's a shitty setup too.
Hey, wait. I can't hear anybody that's talking, man. Let Romeo talk, yeah?
Journaling is essential.
Ken, you got that guy who has the recording in the background. Can you mute your mic? And regarding your question, Robin, what's the point you're trying to get to?
The point is, everyone agrees that a setup fails, right? How is it that possible that you can always tell that you were wrong, even though your setup would have been A+, but it still failed?
Misassessed the setup. You're not a robot. You're not an algorithm, right? If your setup failed, there was I can guarantee you that if your setup failed, then you made a mistake somewhere. And go back, look back at your A+ setups.
I hear your feedback.
This guy who's recording again and again, you don't mind, mute your mic, right?
When you catch a move,
this guy who's recording, mute your mic. If you don't mind, thank you.
It's Z1 Trader, unfortunately.
Z1 Trader, please, if you don't mind. Mute your mic.
Dude, my shit's done, dude. Like,
long enough.
1 second. If there is no order, my friends, then this fun will be over and I'll have to speak by myself, right? So please maintain order. So we were saying, Robin.
Yes, Romeo. I understood.
Right? So there is never, ever a time where price is wrong. Price is always right. It's whether you're in sync with it or you're not. That's all it's about. There's no other explanation. There's no other way around it.
Okay, thanks.
Gorgeous, beautiful. Look at that. So now we move on to number 2, which is the market efficiency paradigm. Oh, repackaged ICT bullshit. Fuck you. No, I'm focusing mainly on highs and lows right now, right? Of course, we all know the market efficiency paradigm as shown by ICT. The diagram, smart money, dumb money. I won't be reteaching what he taught, but I'll be looking at it from a different perspective. Right? Because the concept of smart money and dumb money has always existed. It's the way the markets work, right? It's run by certain people. The markets are owned by a small group of people to sucker in a large group of people. So who is smart money? Answers. Who is smart money?
$1 million players.
$1 million player. Right. What else?
The guys who understand
You want to stand out, he said?
No, I said the guys who understand the algorithm, which the large funds don't.
Wrong. Smart money is a small group of people, right? Whether it's a small group of families or friends or whatever, right? We can speculate regarding who they are, but smart money are the market makers, right? Smart money are the market makers. And of course, then you have the sheep to be slaughtered, the suckers. Who are the suckers? Who are they? Another question.
Everybody else.
Retail. Large funds, retail.
The uninformed. Sorry, mate.
Uninformed what?
The uninformed.
Us.
Who are they? Who is it? Me and you?
Yeah.
No, I'll say yeah.
It's not the way ICT Twitter makes it out to be, right? They make you think like if you watch an ICT YouTube video, you become smart money. Wrong. It's a small group of market makers who have always owned the market previously manually and now with an algorithm, right? So previously it was a manual operation of transfer of accumulation, distribution, transferring money, taking it from highs and lows to below highs and lows, right? And vice versa. Which used to be done manually and now is done algorithmically, with electronically, as we have moved into the new era of technology, right? That's how it works. The dumb money is the hedge funds, the institutions, and if you learned one thing from 2022, it's that hedge funds don't know what they're doing, right? You had FTX opening longs at 65K, some bullshit going on over there, right? Hedge fund, right? A lot of institutions going bankrupt all during the year, especially in crypto. If you're into crypto, then you'll remember every single hedge fund and institution, quote unquote, was getting wrecked. Who was wrecking them? Themselves? Nope. Smart money. Markets. Now, smart money has taught dumb money how to trade and use that to take their money. How? These classical technical analysis books, right? What do they teach you? They teach you to buy above a high, right? A double bottom breakout, and sell below a low, right? When you see a double top breakdown, right? So the classical technical analysis, every single school of classic technical analysis teaches you to buy above a high and sell below a low, right? And that is not the case. And in this teaching, this is the most important core part of all these 4 hours. So pay attention, right? This is the core, the essence. So all of you sitting in here, the guys who paid legally, illegally, all the goofball haters as well, everyone pay attention, right? Take some notes. So they have been taught to buy above
Hold on,
highs.
let me record it real quick.
And sell below lows. You can do that without saying it, my friend, right? Buy above highs, sell below lows, which usually will lead to one of two things: a retracement to continue, or a complete reversal, right? When you buy above a high, then you are at risk of one of two outcomes: a retracement for continuation or a complete reversal. You follow? What they're taught in classical technical analysis, whether it's classical support resistance, Wyckoff, Gann, Elliott waves, right? Whatever it is, they're taught. Elliott waves, it's one of the more accurate ones. But what they're taught in general is to buy above highs and sell below lows, buy breakouts and sell breakdowns, right? If any of you have been trading retail before, then you've seen that, right?
Nu îl pierd. O să mai ieși n-al meu dacă îți place.
Hey Romeo, can you go back to what you just saying over there?
Asta, du-te cu Darii și vin și eu în jumătate de oră când suntem.
Smart money has taught dumb money to buy above highs, and for those watching later, there's a lot of things you're gonna have to skim through. But good luck. If you really want it, you will skim through them, right? So, buying above highs, and they expect price to do this. Now, how many times has price done this? In your opinion, in your eyes, in your experience? Not that much, right? What usually happens, and it's not just a pattern. What usually happens is something like this at a bottom or a top, right? Right? So it looks similar. They have tracked it to a close extent, but it's a completely different thing. And a side note, even the market structure shift SMC, quote unquote, traders, what they do is this. They come and they expect the shift to be like this, right? They expect this to happen. So how are they any different from these guys? Right? They aren't. They're all retail sheep. A real market structure shift, and I shit on market structure shifts all the time, but a real one, a true shift in structure where they are no longer interested in the same direction and they have changed order flow, right? They have flipped from bullish to bearish or vice versa. A real breakout will never give you an entry at the breakout position, or a very small, a very momentary entry, right? A real one will really expand. Everyone's going to chase, decline sharply. Everyone's going to be afraid over here, and then rally, right? So this is the logic behind the move. Bottom, right? And of course, always, every single time, there is the higher time frame PDRA involved. Always.
Can you give an example with BTC or something? Because
not now, not in a while. You'll get so many live examples, you'll get bored, right? Wait. So you have a low, the bottom's in over here. Look at the logic. Focus on the logic, right? Not the pattern. You have the low, bottom's in, right? You have a high, market structure shift. You get wrecked. Everyone's selling over here, right? They get wrecked. Everyone's buying up here, right? And the guys were short with their stops over here. Also get stopped down. It sinks deep inside. Everyone's bearish again over here, right? And it rallies. This happened in BTC just, and of course, this is another one of my live calls on Twitter, right? That is a habit which I've taken from ICT, which is fine, right? It gives trust to know that someone can call the moves beforehand, and it is necessary. The least you can do is, as I mentioned in the 3-hour rant before this, the least you can do is call price and explain it in a consistent logic. That to me matters more when I'm assessing somebody, if he's a good price action reader or not, because that's all that matters to me. I don't get your payouts, and I don't get a split from your payout, right? I don't get a cut from your profits, your P&L. That's yours. I don't give a shit about it, right? Can you read price? And can you explain it to me in a consistent logic? That's all that matters to me. Which is why ICT himself, right, got so many students off of demo trading. Demo Waller, right? Why were they so attracted to him? Because he calls price, right? And I'll always pay respect to him. He's the mentor of the mentors. He calls price and he explains it in a sound logic. If he never even showed a single execution, I can see what he's seeing on my charts, which is why I trust him. So the same logic over here, right? There's a key level at 16,200. I'll leave that for you to figure out, right? Figure that one out. So when we were up here, my target was 16,200, precisely 16,200. Go back in your charts and good luck with it. Right? So what happened here was exactly what I drew there. You asking for the example right here. And this one is not a hindsight example. And even if it is a hindsight example, I'm pretty sure that you won't find many people explaining it, even in hindsight, as good as this, right? So the key level is 16,200. False bottom, right? False bottom. It gave you a false double bottom, correct? It rallied into a breakout. Now, every